Welcome to the Finshares Stock Market Lesson Series. And today we are going to talk about a Nugget. Main Nuggets, these are simple things, or these are phrases that we get from the books we read, from Warren Buffett books, feature books, uh, Intelligent Investor, the Warren Buffett way, um, um, investing by the dummies. We get these simple phrases and we try to tell them to you, and we try to explain them to you so that you get to understand it. So today's phrase, as I read it, it says, when you buy a stock, you buy a piece of that company. When you put money in a bank to buy bonds, you basically loaning your money. When you become when you loan your money, you become a creditor, and the bank or the bond issuer is the debtor, such that it must pay your money back with interest. So in this Nugget, they told you that when you buy shares, you buy a piece of that company, and when you put your money in the bank and the bond, you become the creditor, the bank becomes the debtor, and they have to pay you an interest. Yes, so as I keep on telling you that when you invest in a company, you are buying these shares, you are become an owner in that company. You are going to share the company's profits, and you're going to share also the losses. When the company makes profits, it will give you dividends. But when it makes losses, it will have nothing to give you. So that's what it means when you buy a piece of that company. When you buy that stock, become an owner of that company. You become an owner. You take into everything, its losses and earnings, and also you're able to make decisions on its behalf. That's what they are meaning in this phrase, that when you buy a stock, you become an owner of that company. I also told, if you put your money in the bank, yes, of course, when you put the money in the bank, you understand that the money is not yours, the money is for the bank. Yeah? The money is for the bank, you're the creditor, and the bank is the debtor. So that's why they give you some interest on your money, because they're going to use that same money to loan it out to other people. And that's the same thing for the bonds. Here you are giving the government your money, you are lending the government your money, and it's giving you back your money and an interest. So there are no losses. It's a safe investment. You can put the money in the bank and they'll give you an interest. But is that interest greater than the inflation in the country? The bank is giving 4% interest. The inflation in Uganda, it's 10%. You are losing almost 6% of your money being given at a 4% interest. So you understand. So when you buy a stock, you own the piece in that company. And when you put money in the bank, or you hold the bond, they'll give you what? An interest. Major, that's what it meant. You become an owner of company, this side you become a creditor, they'll give you an interest. Majorly, that's what the Nugget meant. Otherwise, I wish you a very nice day.